Hello trade pros. In today's video, I'm going to talk to you about hidden liquidity and how to find levels above which markets are going to move in a high probability, low risk fashion. This is not your traditional technical analysis, and it will supercharge your trading toolkit, allowing you to make better profits. Let's jump into it. Before we get started, I want to tell you that this is a clip from our live trading room. We run this room from Monday to Friday between 9 to 11 a.m. Eastern Time. This information you're about to learn is very powerful. You're going to find out why traditional resistance could actually make for a really good breakout trade. There's a very common misconception that the more times a support or resistance level is tested, the stronger it becomes. We're going to flip that on its head, and I'm going to show you how trade professionals look at this information and how they use it to make a profit. Let's jump right into it.
Look at this. Why do I look at Delta so much? Look at this massive sell Delta just putting a lid on all these buyers. You see that? They just can't get through it. So that's why I'm selling. I'm selling right below there to go with the shorts and around the VWAP. This is a clutch level, but understand one of the things that we talk about in rotations lesson of the course is the more times it touches a level, the less strong that level becomes. It gets weaker because
weakens it every time it runs up to it.
Exactly. Because why? Because now you got more shorts at that level that are trying it. What does that add? What does that equate to? More buy stops above the price. That's where liquidity builds. And don't think about when you think about where's the market going to go, don't think of it from an opinion standpoint. Think of it from where's the liquidity being added. That's where it's going. That's all you got to think of. All right, we're going through. I'm very tempted to buy this. I just want to actually just buy it, lift an offer, but I'm not going to. For those of you that are questioning the theory on why levels get weaker as they get touched, you're watching it happen right now. What is driving this buying right now? Ask yourself that. Why is it going up so much? Who's buying? The shorts at 05 covering their trade because now they're wrong. And so that's what I was saying. Eventually, when the level doesn't work, what you're actually accumulating is liquidity or inventory right above it for shorts capitulating. And you saw it, right? It touched it once, twice, 3 times, 4, 5, 6. I'm counting right now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 rotations to it, for goodness sake.
It's going to weaken the level.
For sure. Just chips away
and that's the definition of a breakout, too.
Exactly, yeah. There you go.
Look at that build. Look at those wicks on those runs. Look at that cell absorption that was taking place.
Right here, yeah. That's beautiful. Those two.
Right there. Look at that.
Yeah. Let's sell inventory getting absorbed. It gets bought out. Who is buying it? Maybe people were trying the bottom of a range, but I think more importantly, buyers down there were short sellers covering for at the bottom of the rotation because they're saying, look, the smart ones at least 1, 2, 3, 4 times we can't get through. Let me just cover some profit down here. Who do you think is doing that? Everyone else is short. So then that becomes the self-fulfilling prophecy of the buys. And the reason it moves up faster is because the closer we get to break even and losses, the more desperate people get to get out. And that's why.
Well, take a screenshot of that because that's exactly what a breakout looks like. And boss, talk about coiling energy because that's a great example of it right there.
It's like a spring. You know what I mean? Like if you compress a spring, if it's a really like high tension spring and you hold it with your 2 hands and compress it, you're going to be able to hold it for a while until your muscles get sore, and then when you let go it just explodes because that's all the tension that's built up. That tension is essentially the nervousness of shorts or the nervousness of the position that we're about to squeeze out. It's like, you know, you're short, and when you're shorting and the price isn't breaking lows, you're not getting paid. So what you're doing is you're shorting and you're just compressing that spring more and more and more and more, and it's not breaking. And that energy has to release. If it doesn't release to the downside on a breakout, then it means it's going to get released to the upside. When you look at a range, the coil, what it does is it doesn't tell you where it's going to break. It just gives you the more that the coil gets pushed in, the more violent the breakout will be. But you don't know which direction. The only way you know is through looking at order flow, starting to see kind of like the buyers get active, knowing where the stops are, that kind of thing. But you build a coil, you can't break the downside, so it goes back up. They get nervous. You start to smell the nervousness in the air, and you just prey on them. The coil breaks to the upside. Now you've released the tension. The coil's back to getting compressed.
All right, trade pros, and there you have it. I hope you've enjoyed this video and it has empowered you to look at resistance and support in a whole new light. These trading opportunities are very low risk and high probability, and they pay you very quickly because they play out in a fast forward fashion. If you like this video, please comment, like, share, and subscribe, and we got a lot of great content coming your way. I want to ask you to reply to this in the comments section below. What do you want to learn about? Tell us what you're struggling with or what you want to get better at, and we'll create those videos for you in our future series. And remember, manage your risk on a consistent basis and trade like a trade pro. Take care.